Hey guys, welcome to your quick market update. We had a lot of information come out this week, a lot of inflation type news like the consumer price index and the producer price index. And consumer price index was at expectations, so not a lot of surprises there. But the producer price index that came out on Thursday, there were some huge surprises in inflation. We're starting to see the impact of those tariffs. What it looks like based on the PPI to the CPI, the producer price index is the manufacturer's cost, and it looks like they're absorbing down the line, the importer, the distributor, they're absorbing parts of the cost to keep the cost to the consumer the same. So even though we saw hotter inflation on the PPI level, we haven't seen it at the consumer level, which is the consumer price index. So it's good news so far. That could change in the future. It's something we're definitely going to keep an eye on. This morning, we got the retail sales report and it came in hotter than expected. So the consumer is still buying things. I'm not sure how they're affording it. The jobs market seems a little weak. We really need the consumer to back off a little bit. Backing off from the consumer buying a bunch of things is going to force manufacturers to slow down and also bring prices down, and that will help longer term with inflation. The good news though is throughout this whole week, we had a lot of Fed presidents talking, and it looks like a drop in September of the Fed lending rate will be a quarter. There is some talk about 0.5%, but I doubt we'll get that far. But there are a lot of changes moving in the right direction on the Fed Reserve Board of people wanting to lower rates a little more significantly the end of this year. So there's talks about up to 3 rate changes to the end of the year. So that's definitely going to be good for interest rates long term. Have a great weekend, and we'll talk to you soon. Thanks so much for watching.